Don't ignore the written parts of the syllabus. The pilot paper was 40% non-computational. I had to put an exclamation mark in there because that's an amazing statistic. So out of the 90 marks on the pilot paper, something like 36 marks were on non-computations. In other words, you just look at some words and say, yep, A, B, C, D, I think it's A. Do you have to do any numbers? No. You just look at the words and you choose something. Now, I can't guarantee it'll always be 40%, but what I can guarantee is if you ignore the non-computational bits, then you'll struggle to get your 50% to pass. So can I suggest being very, very careful with your non-computational aspects. Most of us love the numbers with a calculator, pen and paper. We can do something with it. And we are attracted to numbers as accountants. But the examiner knows this, that testing understanding from an examiner's point of view is often best done not through numbers, but through non-computational exercises and challenges. So that's extremely important. So don't ignore the written parts of the syllabus. Don't ignore the accounting standards. There are about 10 of them in our syllabus. Things like if you've got a year end, the financial reporting date, if something happens after the year end, let's say at the reporting date you have a big asset of a receivable. A customer owes you money. So you get quite excited about that. You bring it into your balance sheet, your SFP, as a big asset, 100,000, whatever, receivable from customer C. Just after the year end, before you finalize your accounts, you suddenly realize that that customer C has gone into liquidation and that 100,000 will not be paid. Would you agree that 100,000 must be written off as a bad debt? Because that doesn't really exist. Even though at the year end you feel you've got 100,000, if a few days later you come to know that the customer has gone into liquidation, obviously that must be written off as what's known as a bad debt because you will not receive that money. So that kind of thing is a subject of an IAS, an International Accounting Standard. Occasionally these are called IFRSs, International Financial Reporting Standards. In the year 2000, they started calling them IFRSs. But for about 20 years before that, they called them IASs. So IASs and IFRSs, if you put them together, there are about 10 of them in your syllabus at F3. Very, very easy indeed. One example, of course, is the events after the reporting period, known as sometimes post-balance sheet events, the subject of IAS 10. I love the standards myself. I actually teach an ACCA paper that was almost exclusively standards for about 12 years, I think. So I like the standards personally, and I hope to communicate that interest in the standards to you. Standards are simply good practice. So don't ignore the accounting standards as you prepare. What else? Don't try to pass without learning and understanding the principles in the standards, as I was saying. Don't ignore the need to practice as many questions as possible. It is crucially important to always attempt the larger ones when preparing for the exam. As I was saying, if the examiner says to you, can you work out this little bit of what's known as working capital, which is a small piece of the cash flow statement. Working capital covers things like inventory, receivables, payables. And that constitutes what's known as working capital, a small little section. So the examiner might say to you, can you work out the working capital section of cash flow statements? Is it an inflow or an outflow? Please work out a figure. Now, unless you do a big cash flow statement, you can't actually see that working capital in any kind of context. So as I was saying a few minutes ago, you must understand F3 in the context of big questions. So on the video, in our material, we do these big questions because you can't tell which bit of the question is going to come up. And rather than look at little questions as if they exist in isolation on their own, we tend to weave them into big questions, and that's what the examiner recommends, the ACCA examiner. Don't give up. This subject is not impossible. It requires time and effort, but if you put the hours in, you will give yourself every chance of passing. The interactive LSBF college has been based on good pass rates. And we're not perfect. We don't get 100% through. Sometimes we do. But with your help, we can do well together. It's extremely important to realize that you are the one doing the hard work. Don't rely on the videos only. Though, as I say, if you attend regularly, watching the videos, doing the homework I suggest, etc., you will easily pass this exam. Right, what else? What I thought I might do next is to pick up a couple of these examination questions, just to show you how easy this is, really. So before I even do that, I wonder if I can explain to you a particular rule in accounting. Financial accounting F3. I'd like you to work with me, please. If I draw a line down the center of a page, and I'd like you to work with me, please. On the left-hand side, I'm going to say, on the far left, assets, leaving a line, expenses, and losses. You'll tell me, I hope, or I can tell you anyway, that all these assets, expenses, and losses are debits. To increase a debit, I suppose you debit it. DR is a short form for debit. CR is a short form for credit. Many, many years ago, someone asked me, why is credit abbreviated to CR, the first two letters, and debit abbreviated to DR? And I said, I don't know. But 700 years ago, someone decided that, so I'm just following those rules. But it just probably balances nicely with CR for credit. Our debits, to reduce, you must credit it. Okay, so CR, the first two letters of the word credit. So the language of accountancy is debits and credits. The functions are pluses and minuses, so it's quite restricted, really. Either debit or credit, either plus or a minus. So assets, expenses, and losses are always treated as debits. Now, on the other side, the opposite of assets is liabilities. And that includes things like capital, profits, etc. The opposite of expenses, of course, is income. And the opposite of losses is, of course, profits. And all of these items, as you would imagine, are not debits but credits. To reduce a credit, you must debit it. And to increase a credit, you must obviously credit it. Now, that's absolutely vital. Absolutely vital. There are lots of other more complex ways of remembering that basic rule, but I find that works quite easily in F3 for most students. So assets, expenses, and losses are always debits. So if you have some cash and the business introduces more cash, yes, so shall we say the business has some cash and some more cash introduced by the owner into the business, let's say, would you agree the asset of cash goes up? So assets, expenses, and losses are treated the same way. Liabilities, income, and profits are treated in the opposite way. So write that down, memorize it. That's going to be a great help for the future. There are more detailed concerns about that rule, which I demonstrate on the tape. But there you are. That's a start. Now, armed with that, I'm going to attack a couple of past exam questions. So let me take you into the first.